Hi everyone, this is Craig, the options linebacker. This is the weekend report for Sunday, June 20th. I'm going to start out today with the monthly chart on the S&P 500, and this is very consistent with what I've been doing lately, doing this outside-in approach, because I think this is the only way that you can do it when we have these big swings in the market. Otherwise, you can let these small swings and the recent price action kind of override your emotions and let you get lost in the bigger picture of what actually is going on. Now, what I want you to notice on the S&P is every time we make a recent high like this and then pull back from there, that doesn't just keep on going down, right? It, in most cases, keeps on going higher, and each swing, even when we're at the very top, there's always at least a retest of the top, if not a decent lower high that comes very close to a double top. So we've seen that back in 2000, back in 2007. Every time it looked like we were putting in a top, we kept blowing past that top until we finally made an actual higher high before things fell apart. But that's not what we've done so far here in 2010. We went straight from, in this case, this is a lower high, but in terms of just this rally, we've made a high, we pulled back from here, we have not put in the lower high yet. Let's get more detail on the weekly chart. The weekly chart allows us to get a little bit more detail, and we can see that this rally off the March 2009 bottom, 5 nice waves to the top. It might be appropriate to see an ABC correction, especially as bullish as things were at the end of April. They were very, very complacent with the low VIX. It's about time for a correction, which in effect does the market a big favor longer term because it settles things out and allows new buyers to come in. But it's painful to go through in the short term. So it looks like we've done the A wave down here, and we're definitely on the B wave higher. Now, how high is that B wave going to go? Now, that we don't know yet, but what we're expecting to see is at some point this wave to put in a lower high and the C wave to kick in. And again, we don't know how low the C wave is going to be, but it would be fair to expect that C wave to come all the way down to at least a 38.2% retracement of this entire rally, which would be at about S&P 1010, which isn't that bad. It's not that much lower than the bottom here that was put in May and June. Now, there are a lot of people out there that have noticed this head and shoulders pattern potentially setting up. We set up a left shoulder, a head, and it looks like now we're working on that right shoulder. And if that's the case, then the target below is going to be essentially the same distance from the neckline up to the head. And that would put us all the way down at around the 61.8% retracement, which is going to be the high S&P 800s. So around 880, 890, somewhere around that area. So I think ultimately this correction could bring us anywhere from a 38.2 correction down to a 61.8% correction. Again, this is all very normal. This would be actually in the best interests of the market longer term. It's not in the best interests of a market to just keep on rocketing to the upside. Problem is, it's not sustainable. The faster it goes up, the faster it comes down, as we've seen recently, including the crash on May 6th. I think, as we know by now, was really no accident whatsoever. So this is my primary forecast right now, which includes a lower high in the short term, probably sometime this summer, and working to a lower low, part of a corrective pattern. But the fact that this is such a common looking pattern seen by everybody makes me wonder if we might not have a different outcome setting up. Now, that outcome, if you've seen this megaphone pattern that we have setting up here, means that ultimately this is a bearish outcome for this. But what we could see is one nasty rally to the upside with an upside target around 1300, believe it or not, which would be the top of the megaphone pattern, and then we'd see the ABC correction kick in at that point. Now, the reason I think this is a fair possibility is the problem is that in the May-June bottom here, the sentiment was so bad. There were so many people jumping on the bandwagon to go bearish, and for good reason, because all the pundits were out there were banging on the table, including the Elliott Wave guys, saying, hey, this is it. We're going to see, S&P 200 here pretty soon, or whatever their figure was. The sentiment in this blue area here was just so incredibly bad, just as bad, if not worse, than it was around in this area, believe it or not. And the problem is when too many people are wrong on the wrong side of the bandwagon, then you see all that short interest unwound to the upside, and we see some incredible rallies. I mean, back in January, February timeframe, we had some bad sentiment too, and it wasn't that bad. And look at the resulting rally that came out of this, and a lot of that was a short squeeze. So I'm not necessarily calling for this shot to 1300, but the potential is there just because of all the wrong way sentiment that was set up during this bottom. Now here's a daily chart on the S&P, and what we can see is kind of a nice symmetry. We had the initial move down, which was very strong, a very strong matching bounce back up, and then the next move down was a little bit tamer, and then a little bit tamer bounce back up, and this bounce down was not that bad at all. So you can see this is why we built these very positive bullish divergences on here. As we made lower lows, we made higher lows on the MACD histogram. And as of last week, we'd still not broken out of the box yet, but what we talked about was saying if it breaks out of this box to the upside, then we are starting to favor an upside move, and that means, in effect, that the B wave on the weekly chart is kicking in, and that's what we're seeing right now. Now again, here's a daily chart in the S&P 500. Here's last week's box that we drew. So what we're going to do is we're going to look at these fibs here of this correction move here. That is 38.2%, here's 50%, and the 61.8% retracement. If the price gets past 1150, if we rally past 1150, then the odds have improved for that move back up to 1300. If, however, the price stalls at either 1130 or 1150 and shows a lower high, then chances are pretty good, then we're now moving into the C wave lower at that point. So just a word on position management. We just finished out another profitable, difficult but profitable option cycle for June. And what we have for July left, we have a bull put spread. We never got the move really off the bottom to be able to get into a bear call spread, and actually very thankful for that. Sometimes it's okay just to have one side of the condor on when we don't have the probabilities and the edge working in our direction. So this one looks to be very good. We're probably just going to be able to let that one go and expire worthless for the month of July. Now I have the possibility of a high probability trade setting up for August if we get a little bit more rally here, and then a scary higher low. These always show up. We had these back at the end of February. This is a perfect entry for us. We'll get this scary higher low where we're going to drop like a stone for about a day or so, and it's going to freak everybody out. Everybody's going to panic and think that we're heading down to S&P 200 again. It's just going to generate that higher low, and we'll probably end up at least rallying to 1130, 1150, or who knows, possibly even higher. So we're going to look at that for an entry point whenever that does show up. Now, if you've traded options before, you know that if you sell options, it can be difficult to deal with moves like this that just go ballistically to the upside and then drop like a stone to the downside. That's why we also include in our strategy some swing trades so we can take advantage of these big moves that we see to the upside, to the downside. This was one short trade that we took with an entry here and finally finished out a couple of days ago with the last half of that position. So we got a nice swing to the downside. We also have a long trade setting up any day now. And that's it from the locker room, folks. Have a great week. Happy Father's Day to you all, and we'll see you next weekend. Take care.